The institutions are here. They're quietly buying and they're accumulating. And if you look at the volumes, it's solid. That's over $600 trillion of value in the world right now. If you just get just a fraction of that into Bitcoin, Bitcoin doubles, triples, quadruples overnight. So people are going to start to realize, I've got to protect my capital somewhere. Where is the capital going to be reallocated from? It's going to be reallocated from bonds and real estate because it's easy to manage your holding of Bitcoin. You don't have any tenants, you don't have a management company, you don't have taxes on it. You buy it, hold it, put it there, and it just holds its value against the depreciation of the US dollar. Dollar is being devalued to manage all that debt. We know it, it's reality. Everybody in the Bitcoin space is becoming clear about this. And people in my industry, in the traditional investment industry, are waking up to this.
Hey, James. Hey, David. It's been a long time no see. I feel like I see James' tweets all the time. David, I think it's been at least a couple months since we've seen each other. Hope you guys are doing well. I feel like in Bitcoin time, 6 months is like 50 years. So I hope you guys are thriving. James?
All is good, Nico. It's awesome to be here again. Always fun to be on your show and talking to you. You have some interesting and insightful questions. So I appreciate that.
Yeah, thanks for having us, Nico. I live in a cave, and so occasionally I come up from a rock here, and so it's good to be with you.
Well, good to see you guys, and great to talk with you guys again. So, of course, for anyone who doesn't know, these gentlemen are with the Bitcoin Opportunity Fund. They're both managing partners, and we're going to talk about investing in the Bitcoin space. But before we get to that, James, question for you first. Has Bitcoin become boring? I mean, I think a lot of people were expecting fireworks, right? Last year, I think it was like about 130% return. MicroStrategy outperformed Bitcoin. This year, it's going off to a slow start. If you compare it to every other cycle in Bitcoin's history, it seems like it's underperforming, if anything. So, James, what's going on in Bitcoin? Has Wall Street captured it? What's going on?
It's manipulated. No, it's look, it's grinding sideways. It's consolidating. I think it's very healthy. So let's walk back, to the summer and heading into the election. And this is a key point for Bitcoin. You had the halving, and everybody expected for Bitcoin to just rip up, from the halving, and we had continued kind of grinding sideways. We did have a nice, a nice acceleration upward from, the mid 30s into the 60s. We had a great run there, and it just consolidated sideways all the way until the election. Why is that? There was so much uncertainty, Nico. We weren't sure which administration we were going to get. And the last administration was absolutely awful for cryptocurrency and Bitcoin. There's just no other way to put it. They were antagonistic. They were oppressive. They were unclear on regulatory rulings. The SEC would, instead of going through the proper legislative channels, they would instead they would prosecute and use that as kind of a rule of law and weapon. And it got banks scared to even hold Bitcoin, to do any business with Bitcoin companies and in the space. And so there was a lot of uncertainty. Operation Choke Point 2.0 was that was real. We'll talk about it in a little bit if we want to. But then we had the election, and when Trump was elected, it was very clear. Leading up to the election, he came to the Bitcoin conference. He talked about Bitcoin. He talked about cryptocurrency. And he was elected, and Bitcoin ripped upwards from the high 60s all the way up to almost 110 at some point late last year, early this year. And so that has been a significant move. Now, since it ripped higher up into late November and into December, it's been grinding sideways. And I think, as I was alluding at the beginning here, it's a very healthy consolidation. We have a lot of old, OGs, the original gangsters who were holding on to these coins. They've been holding on to years and years and years, have made many millions of dollars from them. And I believe that there's a significant portion of those that the activity we're seeing, some of that is just OGs selling out and capitalizing on their efforts and their hard work this is, but I'm not being funny here. That is hard work to hold on for this long. That is admirable. It's incredible. I believe that most of them still have a core position they're holding on to, and that's great. So they're going to go and get maybe a nicer house or do some things that they've been waiting on. It's a long-winded answer to tell you that I think this consolidation is healthy because the institutions are here. They're quietly buying. I know some extraordinarily intelligent investors in this space, in the traditional space, that are here now. I'm not talking about endowments or large institutions, like pension funds, but I'm talking about large hedge funds who are very smart and longer term holders. They're here and they're quiet about it, and they're accumulating. And if you look at the volumes at the 90 to 95,000 level, it's solid. It's really solid volume in here, which is creating, quite a bit of support. And we like to liken it to a coiled spring, and that's where I believe we're at on Bitcoin. And there's a ton of tailwinds we can talk about, but that's kind of the way I see it.
Yeah, and so many good points there. So OGs selling and what you said is the hard work of it, because as anyone who's been in the space for a while, like hodling is easy conceptually. Like if you describe hodling, it's such an easy thing, but it's a spiritual journey. It's an emotional journey. You really change, and seeing your net worth, fluctuate, 50, 60, 70%.
Skyrocket, right?
Yeah. It's pretty crazy what it does. So, for someone who has, was acquiring Bitcoin at $500, $600, $700, now it's at 100,000, or it was 100,000. It's more than 100x, right? That's completely life-changing for a lot of people. So that totally makes sense. And I think what you're talking about, the election, because we saw the price move up as soon as it was certain that Trump won. And I think the industry, with all the stuff that's been coming up with Operation Choke Point 2.0, I mean, I was just in D.C. with Senator Lummis 2 or 3 weeks ago, and what she's saying, what was happening with internally with the FDIC at the Federal Reserve, it's becoming very clear that the previous administration did not want this industry to succeed. They're trying to isolate it from the traditional financial system. So I think as soon as it was clear Trump won, that obviously gave a lot of certainty to the market. And I do agree with you. This is a healthy consolidation. But, from a Bitcoiner coming from the 2016, 2017 era, this is very boring, James. David, I'm going to pass it on to you. Has Bitcoin become boring? Is this a new era in Bitcoin's history now that institutions are coming in, now that nation states are coming in? There's talk about a strategic Bitcoin reserve on the federal level. There's talk about strategic Bitcoin reserves on the state level. David?
Yeah, no, I wouldn't say it's boring, Nico. I think it kind of reminds me, excuse me, of last March through September, when, I could share the screen if you want, but you can look at charts of Bitcoin. It was in a bull flag period, right? You had this momentum coming out of the whole downturn of 22, 23, and then we kind of paused. It just, markets breathe a little bit, and I think that we're seeing that again, that, it's run hard since the election, as you said, Nico, and I think people are just waiting for the next catalyst. Like David Sachs, his press conference last week, to me that was very much in line with what they've kind of alluded to over the last month or two. So, there's no real great shakes. I think the question is just, what are the next catalysts that move us up and to the right? And conversely, is there, people ask all the time, is there downside risk here? And it's, of course, like all assets can sell off if something happens in the world where there's a risk off moment, but that's just temporary. And our view is that there's a lot of support down around the 90,000 area of Bitcoin. And if it broke through that on some, market chaos, maybe it goes into the 70,000s, and there'd be next support there. We'd actually be excited about that because for our funds, both Fund 1 that we run and the Fund 2 that we're raising money for now, we're able to take advantage of those downturns and add more to positions, whether it's Bitcoin or Bitcoin-related companies. So I don't think it's boring. I think just markets are breathing and pausing.
Yeah, absolutely. I agree with you guys. So what do you guys think about the strategic Bitcoin reserve? There was some news that was coming out that a lot of people were expecting that Trump's executive order was going to mention Bitcoin. A lot of people were expecting that. A lot of people were disappointed that it didn't. I have some information, I can't say from who, but from DC, that the Ripple team was essentially trying to sabotage the Bitcoin-only strategic reserve. Do you think there's a possibility of it happening this year, James?
Well, okay, so the strategic reserve. Let's back up. It's the Bitcoin. It's the act that Cynthia Lummis, Senator Lummis from Wyoming, had authored.
Well, there's two, but to be clear. So
Yeah.
there's two. There's the I think a lot of people were expecting a strategic reserve executive order that would essentially make it so that the United States wouldn't sell any Bitcoin. And then for longevity, there's the Bitcoin Act, which would go through the legislative process, which would make it very difficult for a next president to essentially repeal that. So, yeah.
Yeah, there's two. So it became, but chronologically, the first one that came about was Senator Lummis's bill that she authored early last year, I believe, and she has not. Here's the thing, that has to go through a legislative process to be adopted, to pass into legislation, and what that means is she's got to get a co-author. We don't have one yet, or she does not have one yet. It's got to go through committees. It's got to have comment periods. It's got to have revisions, possibly major revisions, possibly major concessions. And then once it gets through that gauntlet of legislative process, which could take months or years, then it finally passes both houses of Congress and the Senate, and it ends up on the president's desk, which we would fully expect Trump to sign into law. But it's got to go through that process, and that could take a very long time. So what people were hoping, like you're saying, is that in one fell swoop, Trump could sign an executive order and be securing the Bitcoin that we have on the balance sheet and protecting it and possibly buying some more. The thing is, he wouldn't be able to buy as much. It's unclear how much he would be able to buy and where they would actually hold it if he did it through executive order. And so people were disappointed about that. That's for sure. And that's why you're seeing some of this downward grind of price action in Bitcoin, since David Sachs had spoken last week, since Trump has been in office and has not announced anything about a Bitcoin reserve or any sort of executive order on that. And so, and then you couple that with macro headwinds that we can talk about, that's what's causing this. But all in all, to answer your question, no, I don't expect that bill to be signed into law this year. That I think it's going to take time, but that's okay. Here's the amazing thing. Here's the thing that people are not acknowledging that we need to acknowledge. Number one, we have an administration that's not attacking the cryptocurrency industry anymore. They're embracing it fully. I mean, Trump had his own coin, right? And so did his wife. So number two, Bitcoin is at the front end of that. Regardless of what's going on with the XRP, I think that Bitcoin ultimately just weathers that small storm and comes out as the clear favorite to be in the strategic reserve, to be the main holding of the strategic reserve as a digital asset. That's what's happening. So, but this is front of conversation in DC. This is on my Twitter feed every single day. I see people from DC, not just Senator Lummis anymore, talking about this. That's important. This is really important. It's this is becoming something that has to be a conversation now, and it's front of mind for people who are lawmakers. And that's important. And we should embrace that for two reasons. Number one, we're not going to have that nature of attack from the last administration anymore. And number two, we'll probably get some good clarity on regulation going forward. And that's what we want. As investors, we want clarity. I'm not asking to be in the Wild West over here. I would rather have clarity and allow for institutions to start building their positions and their holdings in Bitcoin and start allocating to these companies who are building things in the ecosystem that are important, important solutions for people that prior to this, they just couldn't get off ground zero because of the nature of the antagonism from the Biden administration.
Yeah, absolutely, and I completely agree. I think it was at first I believed it wasn't malicious, and then as time progressed, it became very apparent, and it almost kind of backfired on them a little bit, because I think Bitcoiners inherently were not into politics. But, from my perspective, I remember as soon as the Samurai wallet developers were arrested, in my show, I'm extremely neutral. All of a sudden, I was saying RFK 2024, Trump 2024. And then, of course, he was promising to free Ross. So I'm going to pass it on to David. And I agree with you, James, right? Because there's two ways to go about this. Trump could do it via executive order, but it doesn't have the longevity. All it takes is the next administration to just reverse his executive order. If a strategic Bitcoin reserve is to last in the United States, has to go through legislative process. Do they have the votes? The Republicans only have 53 seats in the Senate, right? It's not filibuster proof. They need at least 60. That's something that Senator Lummis was telling me. So, David, what is the significance of the talk of the strategic Bitcoin reserve from an investor standpoint? Because the way that I see it is, it legitimizes the asset in the eyes of traditional investors. Oh,
David, you're on mute.
Oh,
there it is. There we go. Yep.
No, you got me. Yeah, a couple of things come to my mind, Nico. Look, first off, there's a lot of states that are leading it. It feels like Utah is the first. And so to me, like all things in this country, most great things have come through the state level and then work its way up to the federal. So if we start seeing 20 some odd states begin to put a strategic Bitcoin reserve, you would think that the congressional folks down in Washington representing those states begin to also embrace it. So I think that we're getting a groundswell there. I think that also from the Trump administration standpoint, I agree with what James is saying, that you kind of you almost want the sausage-making process to take time to get it congressionally put in place so that it doesn't get reversed 4 years from now, like Nico, you're talking about there. And I think that, I think that there's a bigger thing going on here. Like, we're obviously watching the gold and silver markets because those are sound money. We believe that Bitcoin is the soundest form of money in the world and will prove to be, and is just so undervalued relative to all other asset classes. But gold and silver are going to be good proxies also to watch. And I think there's some interesting things going on in that market, including possibly the Bessent and Trump teams, if you will, or the administration looking at, possibly should they need to get the U.S. Fed, an audit of the gold held by the United States. There's been no audit done since the 1960s. It's unclear how much gold is in Fort Knox. When Germany around 2010 asked for its gold back that got parked in the United States after World War II, it took a long time, over a year for the U.S. to conjure up enough gold to get it back. And guess what? None of it was the gold bars that were segregated, that were time-stamped, if you will, equivalent, the segregated gold bars that Germany put here. So something happened with that. In other words, have we sold out the gold? How much is there? So where I go with that is because I think that Trump and them are trying to do, and Bessent, is to go back to a model that has a sound currency formation. And it's going to likely, in my opinion, be Bitcoin and gold back type sound money. And you have to begin that process. It's slow because of the audit factor on gold. But it would achieve a few things. One, it's going to signal to the world that The U.S. is about sound money again. It's also going to allow the balance sheet of the United States to be strengthened if you can remark the gold that you hold at a higher mark-to-market level. Gold's only marked at $42.20 now on the Treasury's balance sheet. It would get remarked to 2,900 if you did it there, or could they even remarket it 5,600? Luke Groman's talked a lot about that. And then lastly, that process would also gently depreciate the dollar, which would help the Trump administration in trying to build back America again and bring back jobs and make us an exporting nation. So from a strategic, financial, and also defense standpoint of getting businesses back in America, I think there's some stuff going on. So I've been long-winded, but to summarize, I think that, it's going to start at the state level and Strategic Bitcoin Reserve, but I think watch this process over the top as it relates to some of what's going on in the gold market. I think Bitcoin could be part of that solution going forward. This will take time, but something good could be on the other end of it.
So, and appreciate that answer, David. And I'm going to ask you another question back, which is, do you believe that do you believe in the diminishing return theory? Do you believe in the theory that essentially, Bitcoin's best days are behind it? The opportunity is not there anymore. The market cap is so big that it's extremely difficult for it to double. How in its earlier history was a lot easier.
I have a lot of thoughts on that. One, James and I always talk about, at our fund, we're open to looking at any model, right? I think one of our superpowers is we know that we don't have all the answers, and we're willing to consider anything. So I look at the power law model as an example, and you could argue that, the curve flattens out over time. You don't get these, compounding at 100% or 65% consistently for the next decade. That's possible. I also think of I think of it from a standpoint of valuation, though, that Bitcoin's a $2 trillion asset class in a world of 900 trillion in global financial assets, and Jesse Myers and James have talked a lot about this, that, it's so asymmetric and so tiny right now at less than 1% of global financial assets, Bitcoin, that then I start thinking of if you had a financial crisis like '08 and it's now this time going to be at the sovereign level and they're forced to print money or just in the midst of that chaos, this could be like credit default swap market where it's far more asymmetric and it goes from 2 trillion to 30 trillion faster than any of us could imagine. And so I'm not really answering your question, but I guess I think anything's possible. What I do know is that this is probably Bitcoin is the cheapest asset class in the world, and I don't think any other assets will compound faster than it over the next decade. That to me seems really highly probable. And then, could we end up at $1 million a coin far sooner than that over the next 3 to 4 years? Again, possibly, if depending on what shakes out in the world.
And James, why is that? Why would that phenomenon happen? Why would Bitcoin grow from a $2 trillion asset class to a $30 trillion asset class? What characteristics does Bitcoin have that make it appealing for investors?
Yeah, I'm gonna share this this chart that Jesse Meyer he has allowed us to, or he's agreed to allow us to use this so graciously, so I don't have to keep making it myself. They look so similar. But what David is saying is that, look, this thing is it's a $2 trillion asset, $900 trillion of global assets. So let's talk through that. When you have institutions that are coming in and they see Bitcoin as a separate allocation in their portfolio, that's an important allocation. The smart institutions are starting to realize that the allocations to Bitcoin not only enhance their returns, but they enhance their risk-adjusted returns. That means it makes their Sharpe ratio better. When you include Bitcoin in a larger portfolio, it enhances your Sharpe ratio. That blows their mind. And when they see that, they realize that this is an asset class they need to start allocating to. Now, we can go all the way up the top level and say, well, why is it important to have sound money like this? And sound money that's different than gold. Well, we've seen a lot of problems with the manipulation of gold, especially recently. You own gold in a vault in London, and even if it's held by the Bank of England, you may not be able to get access to that for months. And that's just insane. Bitcoin you get access to in 10 minutes. You have not only can you get access to it, but you can move it for a fraction of the cost. I mean, think about how much money it costs to move gold. Nothing against gold, but let's talk about the future. Digital currency, digital assets. And so when you have investors that realize that, my God, I can move $1 billion of Bitcoin in 10 minutes or less for just a few dollars, as opposed to $1 billion of gold, how long it's going to take to get that out of the vaults of Bank of England, get it on trucks with armored vehicles and guards, get it onto a ship or a plane or wherever it has to go to get over to Switzerland or wherever they want to put it. Suddenly, you're trying to bring that back to New York. That's a big undertaking. Okay. So with Bitcoin, it's done like that. And it's all verified. You don't have to go in and see if it's just gold-plated nickel. Like, it's there. Okay, so that's really important. And investors are coming into this realizing, okay, you've got this asset class that's growing. It's gaining traction. It's being talked about in DC. You have Bitcoin spot ETFs that were launched last year at this time, 1 year ago. And they're the fastest growing ETFs in the history of ETFs. It's just not even close. It's actually laughable looking at them. The BlackRock's ETF IBIT gained over $50 billion in less than a year. So it's mind blowing. And then, Fidelity gained another 20 billion. So between all 11 or 12 of them, there's just a massive amount of demand for these things. Why is that? Because it's easier for institutions to buy them. It takes away all the operational hurdles. That's one big part. When you look at the total assets, though, and you look at how much money is just in cash, $120 trillion in cash, or $300 trillion in bonds, $330 trillion in real estate. Bitcoin right now, up to this point, has only been taking market share really from equities, risk assets, and a little bit from gold, But as it gains traction and widespread adoption as its individual class of asset, that's much like gold, but an upgrade, like we just talked about. Well, then people are starting to realize that, oh my God, the Fed just lowered rates by a full percentage point, and the 10-year went up by a full percentage point. Why is that? Well, because inflation might run hot. Flash forward just 5 or 6 weeks later, and sure enough, you've had two prints that are come in pretty hot between the CPI and now the producer price index, where people are realizing, oh my God, we might have inflation flare back up here. So I need higher interest on my bonds to get a real return on those. I've got to protect my money somewhere. And so you will start to see, as we just get a deluge of additional treasuries being issued here and floated by the U.S. Treasury to just keep printing, to keep filling those deficit holes, regardless of how well Doge does. You're not going to clear that deficit. Let's just get real. It's not happening. It's just mathematically not possible where we are. Okay? So I'm glad that we're doing that. I'm in full support of it. But let's just get real here. We are running such large deficits that's not going to solve itself in a year. Not going to solve itself in 4 years, in my opinion. So people are going to start to realize, I've got to protect my capital somewhere. Where is the capital going to be reallocated from? It's going to be reallocated from bonds and real estate, because it's easy to manage your holding of Bitcoin. You don't have any tenants. You don't have a management company. You don't have taxes on it. You buy it, hold it, put it there, and it just holds its value against the depreciation of the U.S. dollar. The dollar is being devalued to manage all that debt. We know it. It's reality. Everybody in the Bitcoin space is becoming clear about this. And people in my industry, in the traditional investment industry, are waking up to this. And so where's the money going to come from? It's going to come from bonds and real estate. And when those start getting allocated over, just think about that. That's over $600 trillion of value in the world right now, Nico. If you just get just a fraction of that into Bitcoin, Bitcoin doubles, triples, quadruples overnight. We talk about having the strategic reserve. If that happens, well, now you've got game theory. You've got all the other sovereigns that feel like they've got to own some too. So I'm full agreement with David that, yeah, if you just hold everything constant, if you don't keep expanding the money supply, then Bitcoin will probably continue this adoption like this. But if you continue to expand the money supply, which we believe that it's just no way around that, and you now have a different structural adoption change, like it's a sea change of adoption in the investment world of this new asset. It becomes something that will break from those models. I know that Michael Saylor likes to say all your models will be broken, really talking about hyper Bitcoinization. I don't think we even need that for it to break through some of these. So that's kind of, but the models are important. It helps us manage risk, and they're self-fulfilling prophecies. People closely watch these and monitor them, and they trade around them. So it gives us opportunity to move in and out of positions and risk management strategies while we watch those. So they are important, but in the end, I believe that Bitcoin's adoption starts eating into those other asset classes, and it goes from a 2 trillion asset to a 20, 30, 40 trillion dollar asset eventually.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin. Absolutely. And I want to talk about something is you mentioned Saylor, and he said all your models are destroyed. And I think a lot of people were not anticipating his stock to do what it did in 2024, 5x, right? Absolutely incredible. When he started the Bitcoin strategy, he changed the name of his company to Strategy now. I was at $1 billion market cap. Now it's $100 billion. And then, of course, the first company in Japan to kind of follow in the footsteps of Michael Saylor, and it was like a zombie company, essentially. It was like a hotel chain, 48x in the last 12 months alone. So absolutely crazy. David, why is that happening? Why is this phenomenon happening? I mean, why is Michael Saylor's company outperforming NVIDIA? What's going on there?
Well, I think he's unlocked just the ability to do a capital markets arbitrage, right? By, he controlled the stock of his company, the vote, that is, and he was able to set it up where he could issue equity. So again, he started with $500 million of cash on his balance sheet, 2020, bought Bitcoin, began then this capital markets arbitrage strategy of issuing equity, and then tapping into the convertible bond market at 0% financing. And he arbitraged that to do modest, prudent amounts of leverage. I think he's learned good lessons from the Silvergate loan that kind of really nearly bit him a few years ago. And they've just got prudent leverage on this that's generally termed out, that's cheap. They're able to continue to raise equity and cash through that. And they're arbitraging that to turn around and buy Bitcoin as part of the Bitcoin treasury strategy. And I think that, if you, in the future, I think MicroStrategy is going to end up being one of the leading financial service businesses in the world. Think JP Morgan, modern day, where they're the leading bank, you could argue today. And Saylor will own, or MicroStrategy rather, will own 3 to 5% likely of all Bitcoin in the world. And so the old saying, he who has the gold makes the rules, I kind of analogous to this, that when they have that kind of collateral, they're going to be dominant as a financial service provider in being able to borrow against that, to do all sorts of interesting business enterprises from there. And so JP Morgan trades at a 2 times book value today. MicroStrategy trades at just over 2 times book value on its Bitcoin holdings. I think that it's got upside both in terms of its ability to grow its book value as Bitcoin prices goes higher, as it continues to do that arbitrage in the capital markets. I think it's phenomenal what he's unlocked, and he's got a flywheel going, and he has the first mover advantage.
Yeah,
Absolutely.
just to build on that, so people understand that 2x book value valuation that David's quoting, we like to look at it as a fully diluted uh, cap table. So when you look at all of the convertible bonds, all of the executive pay packages, everything, you dilute it all. You dilute all that and you convert all that to common. That's how we're getting to that 2x. That's an important distinction. And then, yeah, something that's interesting about this, Nico, is that, and I've talked to Sharish, the treasurer of Strategy, and the company formerly known as MicroStrategy, and he talked about how they had this advantage of buying this asset, this underlying asset that was so volatile. So David will remember this back in the day. We used to, in the late '90s, we used to trade these convertible bonds of a company called Qualcomm. Now, you guys know Qualcomm and your chipsets in your phones, but back then, Qualcomm was issuing these bonds just hand over fist, and the entire street would just buy them up, gobble them up, because the volatility of the stock was amazing. So these convert bond traders, they could arbitrage the heck out of that. They would delta hedge it, they would trade around it, they'd have conversion rights. It was awesome. I mean, we were doing that all day, every day. Flash forward to today, now you've got this, company that's got volatility, that volatility is tied to that underlying Bitcoin. And so it's not because the stock is not, Qualcomm was volatile because it was a tech business, it was a fast growing business and all that. But, MicroStrategy is not volatile because of structural underlying issues of the stock. And it's not like the company has problems or anything like that. Or it's not because of illiquidity. It's because of the underlying ownership of Bitcoin. The more Bitcoin they put on the balance sheet, the more volatile they got. The more they follow the volatility of Bitcoin. And suddenly, these bonds have become something that everybody wants to own because of the upside optionality on them. And because of that volatility arbitrage you can play with delta hedging around it. And for your listeners who don't understand what I'm saying, is that convertible bond traders, they'll buy a convert like that, then they'll short a certain amount of stock. It's called the delta short, which is the optimal amount to short against it, because that convert can be converted into shares eventually. And so you trade around it and you can buy and sell around it. And it's called delta trading and delta hedging, and you can make a lot of money doing that. So they kind of hit on a nirvana there, and they've continued to capitalize on it. But I fully agree with David, and this is why it became one of our core positions at the fund, is that this strategy is going to continue to build on itself, and we do believe that Michael and Strategy will become the main financial center of Wall Street eventually, as Bitcoin takes hold and becomes that undeniable asset that everybody needs to own.
So when you say they're going to become like a major financial center, and by the way, I agree with you. What does that mean? What does that entail? So are they going to become some type of Bitcoin bank?
Go ahead, James. You go first.
Yeah, no, that's what I would say. It's something like a Bitcoin bank. Just think about having a million. His goal is to get 1 million Bitcoin, which would be 5% of the full float, which we know there's no longer a full float. And so many people have lost coins along the way. Who knows how many have been lost, but certainly a million or two, right? So he'll own over 5% of the float. And so he'll have the ability to use that as collateral, He'll have the ability to do things like lending products, insurance products. There's all kinds of stuff they can do. When you have that kind of that base of assets on your balance sheet, you can become an institution that doesn't have control, but has the ability and is given the affordability to do things like that, and to open products for people that other companies just won't be able to do.
Yeah, and I think the only thing I'd add on to that is, look at a company like Visa, right? Stock is trading at 16 times book value, 17 times actually today. It's a toll road. You could argue Visa is one of the most beautiful cash flow businesses you can imagine over the last, 30, 40 years, where it's just the middleman collecting fees. What if Lightning channels are really where the settlement layer is happening in the world? Because fast forward to the year 2030 something, stable coins were interesting, and that was a great way for the emerging market folks to get access to dollars. But what if we're in a world where the dollar, despite the efforts of the Trump administration and Doge and all that, it proves that debt is debt, and you can really not put that genie back in the bottle, and that inflation and debasement continue. And suddenly the dollar is not a great asset, and U.S. Treasury bonds are not great assets, and therefore stable coins are not that great of an asset, despite me believing that stable coins will continue to grow over the next few years. I just worry about their longevity. Crypto, in my opinion, has a different set of problems. We don't need to go into that. And so I'm sounding like a Bitcoin maxi here, but in general, it's the soundest form of money. And if the settlement layer becomes Bitcoin for this AI world that we live in out there over the horizon, and all assets are settling back there, well then Sailor controlling or MicroStrategy controlling 5% of the float could be the business that is opening all sorts of lightning channels using its Bitcoin to do that, getting paid a toll to do that the way MasterCard and Visa do, and are just beautiful cash flow businesses. Again, Visa at 17 times book value today, MicroStrategy at 2 times. So these are the interesting things that we think about. But it's going to be interesting. But again, he who has the gold makes the rules. Bitcoin's going to prove to be great collateral, and for a company to have 5% of that, that's pretty damn attractive to us.
Yeah, and this is a perfect segue, and it leads me to my next question, which is, and now I'll talk about my personal journey, which is, I got into Bitcoin in 2016. I think the first Bitcoin I bought was at like $600-700. Been at this for 9 years, and now I'm looking at MicroStrategy. I'm looking at Metaplanet, and I'm like, maybe it would have been wise, to buy a little bit of that instead of, approaching it from a, 100% Bitcoin, 100% in self-custody. Especially, MicroStrategy outperformed, let's be blunt, right? MicroStrategy outperformed Bitcoin in 2024. That's the truth, right? Metaplanet 48x.
Yeah.
I think Bitcoin. Go ahead, James.
But the point is, though, Nico, is they're confusing to understand. It took me a minute to get my head around it, and actually talking to Sharish was what their strategy was on the whole thing, to really get a handle on that. So for the normal person who's not doing the stuff we're doing every single day, to hear that you just hear, oh yeah, when Michael Saylor floats equity and buys Bitcoin, it's accretive. You're like, what? How does that? I don't understand what does that even mean? Well, it means that he was able to float stock, right? Get a certain amount of cash, turn around and buy Bitcoin and get a 2x return on that on his stock. So the stock will go up 2x of the amount that he had bought. So if he bought $100 million worth of Bitcoin, like he floated $100 million worth of stock, bought $100 million worth of Bitcoin, his stock went up $200 million. And so that's what he was doing all along that way. This is a very difficult thing to kind of wrap your head around. The Metaplanet thing was something similar. They can't do the converts. They don't have the convert market in Japan. But what they did have in Japan is the lack of ability to buy Bitcoin. So, the Japanese citizens couldn't go out and buy a Bitcoin ETF for their, equivalent 401k or IRA, but they could buy Metaplanet. So you had this struggling hotel chain that turned around and decided to add Bitcoin to their balance sheet. And suddenly everybody's like, oh, wait, if I own Metaplanet, then I've got exposure to Bitcoin, which they couldn't do otherwise unless they were somehow buying Bitcoin themselves. And again, that's not an easy thing for a normal everyday person to go buy Bitcoin in exchange, get off the exchange, put it in a wallet. It's pretty scary stuff. And that's why these ETFs were so big. And that's why something like Metaplanet was so big, because it gave an avenue for people in Japan to buy Bitcoin or a proxy of it. So those are things that, I wouldn't kick yourself. They're hard to, unless you're focused on investing and capturing all this stuff every single day. of course you're going to miss out on that stuff. And that leads to another point, which is like Dave and I harp on this every single day. I mean, you're forced to go invest and take risk to battle against the devalue, the debasing of our currency, our US dollar. You're forced to do that. And so you're kicking yourself because, oh my God, I missed a chance to get a little bit ahead of this whole devaluing game. You know, I can't just buy bonds. The dollar is being devalued at a rate that's going faster than you're going to get paid on those bonds, right? So you're getting a negative real yield. You have to go take risks somewhere. Anyways, that's why we're paid to do that, but because we do it every single day. This is what we do, and we analyze this stuff continuously.
And let's talk about what you guys do, because that was a perfect segue to the Bitcoin Opportunity Fund, investing in the Bitcoin space. You guys dedicate your time to this. This is what you guys do. What is the Bitcoin Opportunity Fund, and what's the pitch? So let's say you're an higher net worth individual, you're older, you're successful in life, and you've made your money, right? You're happy making 10-12%. And they look at the Bitcoin Opportunity Fund. What's the pitch? How do you convince them, David?
Yeah, I think excuse me. It's a couple of things. That we are we are an investment firm that is investing in public and private assets or companies in this Bitcoin space, and we have our seasoned team where we have a lot of experience as value investors and across the cap structure, debt, equity, everything in between, public and private, VC, hedge fund, all that. We included in that is our ability to manage the portfolio, hedging and risk management for the portfolio overall. So as you were talking about before, kind of kicking yourself on Metaplanet, it's like our view is we'll get that asked a lot. Why wouldn't I just buy Bitcoin itself? Why wouldn't I invest in you guys? Why would I invest in you guys? And the answer is, well, you should do both. I think you should own. It's all about diversification. You should own some Bitcoin, and then you can allow yourself to invest a sleeve in us that allows us to invest in some of those levered Bitcoin strategies, to do some portfolio hedging risk for you through the portfolio, to invest in public and private opportunities in this space. Some of these venture capital companies that we're investing in on the private side, could prove over the next 7+ years to be phenomenally, growth businesses. So we're excited about what we're doing there, and I think what you're describing is, we're able to take shots on goal to get some levered upside to Bitcoin, but also then to do some hedging to manage that risk. I'll pause there.
And James, by definition, you guys have to outperform Bitcoin, right? So you can make a if you look at Saylor's model, right, with the base case $13 million by 2045, between 40 to 20% CAGR, right? You guys have to outperform that, which is that's a lot for someone to make for it to make sense, right? Because if not, it's like, why don't I just buy Bitcoin, put it in cold storage? You guys have to essentially outperform that for your clients to be happy. Is that correct, James?
Yeah, that's actually not the way we look at it, Nico.
It's not the way you look at it.
No, we don't look at it and say, hey, we're going to outperform Bitcoin for you. I think that's kind of a crazy assumption. What we do say is that we're going to what our goal is to deliver better risk-adjusted returns for your typical investor, for a family office that wants to get exposure to this fast-growing and exciting space, but just doesn't understand it. Or if you're a high net worth investor, you have Bitcoin and you want to augment that with something that is invested in this space and exposure to some of the companies and things that we're doing that you wouldn't otherwise get exposure to. Now, remember, just to give you some numbers, to give hard numbers for people to understand. This last year we were up 65% net of all fees and everything. Okay, and we're up over 80%, 82% life to date, which is over just 5 quarters, and that's all net. But that does not include marks on privates. Okay, so when you hear some VCs, for instance, talk about their returns, their IRRs, they're by and large not real returns. Those are just Those are marks on companies that they may have made add-on investments or something like that, and they're just marking them up to where that next investment was made, from Series A to Series B or whatever it is. With ours, we're if we liquidate the portfolio, that's what you get, because the privates are not marked up. So that can act as a drag on our returns. So I want to be very clear that over the long period of time, we may do exactly what you just said, Nico. And we are very excited about some of these companies that we're invested in, especially the things that the typical VC can't do. So you've got kind of two questions. Well, why would I just buy Bitcoin? And why wouldn't I just buy a VC? Well, we're doing something different. We can operate anywhere in the space. We can buy public, private, early stage, late stage. We can do structured debt notes, which we've done. We could hedge out the portfolio, which we've done. We could hedge out some of that beta risk in the markets, which we will talk about. We can talk about, and you hear us talk about. But what's important is that we're able to go places that a typical person, like you just said, may be intimidated or just may not have the tools or the access to. And there are a few things that we're doing now that that we're working on that the other people in the space just aren't doing. Like, I could see a hedge fund doing it, but they're not interested in it because they're not interested in operating in the Bitcoin space yet, like we are. It's different. And so, there's a couple of things. David, why don't you actually just talk about a few things that we're focusing on for this next fund that both funds will get allocation to, but these are things that we're doing that you may not hear about in other places.
Yeah, to James' point, we've got our fund one that we're managing, and then this new fund two that we're about to commence with. It's just going to be pro rata investments. We feel like we can repeat the same process we've been doing. And we've got about 3 to 4 private opportunities that we're looking at now that would be probably in the fund here in Fund 2 this spring, and in Fund 1 too. But in Fund 2, the first one it would be the first Bitcoin leverage buyout. And what we would do, and we're in active diligence for, discussions with these guys. We've known the management team for a while. They have a very successful business track record. And we can't say a lot about the exact industry it's in, but it's a non-cyclical industrial service business, and it's a roll-up of various locations in that. It's incredibly cash flow lucrative businesses. You're able to buy these at low multiples, and as you scale the business, you could someday package this up 3 to 4 years from now and sell the entire enterprise scaled up with multiple locations at a much higher multiple. And the beauty of this cash flow that it generates, we can do two things. One, we can put modest amounts of leverage on it to do that Bitcoin LBO. And two, we can invest some of that cash flow in a Bitcoin treasury management strategy to then grow its asset value over time as Bitcoin grows. So hence the term, this would be the first Bitcoin leverage buyout. So we're very excited about that. And again, any investors in our fund prior to that deal get access to that, and in their statements in the fund. So we're intrigued with that. A couple others I'll talk about is there's a Series E pre-IPO round of a really good business that does over $1 billion in revenue. So it's a real business with real cash flow. Tied to the space. Again, can't say a lot about it, but they need to put a pin in their valuation to ahead of their IPO, both for stock option policy reasons, meaning pricing their stock options of recent hires, and two, to have working capital that they need to grow their business right ahead of the IPO. So we're excited about playing a part of that. And then lastly, I'll talk about is just there's a few others, but one more I'll talk about is there's an emerging market mini MicroStrategy play. So everything we just talked about MicroStrategy of being a future financial services business, we're going to be able to buy in at a very low price to book value multiple on this emerging market mini MicroStrategy. We'd be buying a public company in this emerging market country doing a reverse IPO. Again, under NDA, so I can't say a lot about where it is, but we're excited about that. And so we're working on those and a few others. And again, anyone in our fund ahead of those gets access to that.
No, it's really cool. And why? Let me ask you this, James. Like, why are you guys specifically focused on the Bitcoin space? Like in a way, you can make an argument that that constrains you. So why is it about the Bitcoin space that it's appealing to you?
I like to sleep at night. We are very, look, Nico, short of calling myself a Bitcoin maxi, I mean, I don't believe in any other protocol like I do in Bitcoin. And so I believe that everything will be built around this protocol eventually. And this is the protocol that may not be as exciting, may not have the flash and sizzle of some of the other things that are out there. And there are protocols that have value. I'm not going to say that things like Solana or whatever don't have value. They do for certain things. But this is the one I trust. This is the one I can look at and say, I can trust that the vast majority of my personal net wealth can be parked in, and that I can honestly, with full transparency and confidence, go out and invest my limited partner's money in this space and feel good about it. Because what we want to do, like, look, David and I come from this traditional hedge fund private equity world. There are a lot of people who come into this space and just sling it around and are just trying to, obviously, there's opportunity here to do things that we wouldn't do. We saw it in the collapse of FTX and Celsius and all that stuff. There's possibility for that. But for us, we want to do well by our partners. We want to find good partners that will work with us, who are exposed in the space, who have knowledge in the space, who may be good operating partners. I mean, that's what it's all about for us. Like, this is a way of life for us, and we truly enjoy finding great partners and feel like some of these people are my friends, Nico. I see them over, down at the club here. I don't want to have to look at them and feel like I'm doing something I don't feel full confidence in. I want to feel good about what I'm investing in at all times and feel very confident that I'm going to deliver for them what they hope.
Absolutely. And one of the things that you said before we went on air, and I found it really, really interesting, and I would love for you to elaborate on it. You said macro headwinds and Bitcoin tailwinds. What does that mean?
Well, the macro headwinds we're seeing right now. David can talk a little bit about how valuations have gotten way ahead of themselves on the in just the S&P and the total market space, especially in Mag 7s. It's gotten a little bit out of control. We're due for some sort of, we talk about this on Macro Monday almost every single week. We're due for some sort of pullback or some massive liquidity. Right. So either way, these two have kind of been they've digressed from each other. Right. So you've got the valuations are going up exponentially, and then you've got the money supply that kind of turned over. And it's now just starting to turn back up, like the growth of the money supply and liquidity. We're seeing that the Fed is very wary of where rates are. We're seeing that bond investors are very wary about where inflation is now, where it's going to be. They're worried about a deluge of treasury bonds coming into the market. So the price of bonds are going down, yields are going up on the longer end of the curve. That means that liquidity is more or less constrained in a way. It costs more to borrow. And with that volatility of bonds, it costs more to borrow against collateral. These are all things that play into liquidity and the expansion of the money supply and expansion of multiples. So you got that one thing going on one side, tariffs and all that. We just don't know. Markets hate uncertainty. So there is a distinct possibility that we get a drawdown over the next 6 to 12 months. Okay, so that's number one. Number two, you've got tailwinds for Bitcoin. We talked about some of them. You've got the gap accounting that was passed in 22 that is now taking effect, where companies can hold Bitcoin and not be penalized on it by having to mark it as an impaired asset at the lowest value it's traded at since the time they bought it. Now they can hold that fair market value. Big deal. That was a big hurdle for companies to even want to put it in their treasury or hold it on a balance sheet. That's gone now, so companies can do that. You've got SAB 121 has been fully repealed now. The SEC reversed course on that. So there's no longer the worry from banks of holding Bitcoin on their balance sheet. That'll open up all kinds of products and possibilities for major banks to play in this space, especially in Bitcoin. That's another one. You got the ETFs and you get the ETF options. That allows for institutions to manage volatility around holding Bitcoin. Really important. The ETFs have taken off, and the options on them are also getting pretty liquid, especially in the IBIT and FBTC ones. So that's important. Then you've got the Bitcoin Reserve that we talked about. You've got executive orders that are possible that we talked about. You've got the sovereign reserve that we talked about. So these are all things that are tailwinds, including, most importantly, in my mind, is an administration that's going to give us clarity and not be antagonistic against the industry anymore. That's a really big deal, and I think that those are all very strong tailwinds that will carry Bitcoin into new highs going into the later end of this later parts of this year. And I don't know, David, you may want to add some stuff on the macro side, but that's kind of the way that we see it, and maybe how we have the ability to manage our risk around that. Really important part of our fund is that we have the ability to manage risk.
So, David, and before you add to what James said, my question to you is, like, generally what's tended to happen is that Bitcoin tracks the market, right? It kind of tracks the S&P, kind of tracks the NASDAQ. So wouldn't Bitcoin go down if there was a correction?
Well, I think a couple thoughts. Yeah, I mean, certainly there's strong correlation over the last, call it 10 plus years of Bitcoin to tech stocks, for instance, the NASDAQ. And so I think it's still kind of that risk on kind of correlation. But I think at some point, and as we move through time and we're getting closer to that point, Bitcoin will also become risk off, right? It's going to remain risk on just as a $2 trillion asset class with massive growth tailwinds for all the reasons we talked about earlier of bond money coming into this space as an example, right? To hedge the inflation and debasement risk and just general growth for all these tailwinds James is talking about. So I think that those are going to be the risk on side, but the risk off side too, where you see kind of gold and silver and Bitcoin now being, in my opinion, those flight to safeties, the thing that the U.S. Treasury used to be 20 plus years ago, that when the world was falling apart in '08 and Treasury bonds became the ramp that everyone ran to, and you'd watch Treasury bonds yields come flying back in toward 2% because it was the safe harbor to be in. Again, what if on that next crisis is at the sovereign level and all balance sheets at the sovereign level are being questioned because of all the debasement that's coming? It's going to be Bitcoin, among others. It's going to be the safest harbor in the world. It will be the risk-off asset. So to answer your question, sure, in moments like March of 2020 or moments like September of '08 with Lehman going down, all risk assets can correlate to one temporarily. That creates opportunity. But I think then ultimately, as you saw with gold in '08, for instance, it came flying out of that. Gold was the best performing asset in the 2001 to 2011 period, up 8x. Gold miners were up 12 to 14x. We see that same thing here with Bitcoin, that it will be that flight to safety that will be a massive grower for the tailwinds James mentioned and the risk off factors, flight to safety that I'm talking about. This is why we're so highly convicted in our view, and to answer your question of why we've jumped in from our careers in traditional hedge fund land into this space, why we see the opportunity, and why we think our fund can really take advantage of that and make a lot of money for our LPs over time. So I don't know if that answers your question. That's how we think about it.
Just to augment that, and because you may have listeners going, yeah, but it really has just been a risk asset. It has been the tip of the risk spear for a while, and it does grow. It kind of lags. The Bitcoin lags the expansion of the money supply by about 3 months. They just move lockstep, right? There is one moment, though, that like what Dave is talking about, where Bitcoin became risk off and people didn't really realize what was going on. That's back in March, April of 23, when you had the meltdown of Silicon Valley Bank. And Bitcoin had, it had gone from 20,000 all the way up to 30,000 basically during that time. And so it was up like 40, almost 50% during this crisis that people saw unfolding. They thought, oh my God, what if I can't get my money out of my bank? I better own Bitcoin because that can't be controlled. That was new. And that was really important. And that was before the ETF. So this is, this was an important moment for Bitcoin. And I think it's kind of telling that if you have a bank crisis, or like David's saying, if you have a sovereign level debt crisis, where are you going to go? Where are you going to hide? Are you going to hide in gold? Again, it's likely paper gold that you're buying, and that's problematic. Or you may just not be able to get access to it. Do I think that gold will benefit from a crisis of the sovereign level? Of course. I mean, that would be, yeah.
One thing I just want to build on to James's point, Nico, too, on the same question topic. So when we were raising Fund 1 2 years ago, it was interesting to us how no family offices really, there was like maybe a handful of family offices that were taking, we'd get comments like, well, I thought Bitcoin and crypto are dead. That Sam Bankman-Fried guy killed it. And we're like, no, Bitcoin's different than crypto. Let us explain. Well, they weren't interested. What's interesting is we raise Fund 2 now, we're getting more engagement from family offices. And what they're seeing is, hey, 2 to 3% of my assets I need to have in these inflation hedges for debasement risk. I don't really the family office don't fully understand Bitcoin, but you guys talk our language, you understand it. We like what you're doing. We're interested in that. So that's just one example of progress we're seeing of maybe not the institutional classes yet. I'm not sure. It's interesting. I had a discussion with one guy, one of the top 3 guys at one of the endowments at a really good liberal arts college here in the Northeast. I won't say the school. And he said to me, David, he said, I love what you guys are doing in Bitcoin, and I'm a Bitcoiner, I believe in it. And I said, well, why isn't your endowment doing it? Why wouldn't you guys just make a 2% allocation to this space, to Bitcoin itself, or a fund like ours? And he said, well, it's something, but he was honest. He goes, to be honest, I think it's career risk. We're afraid that we'll look stupid in front of the college president and the trustees, and we have a nice cushy job. He was very direct and honest, and I appreciated his honesty. But I think that's where we're at. But I see the family offices warming up, and I think the smart family offices are seeing that a 2 to 3% allocation to this asset class and through funds like us, it makes sense to protect their risk of debasement, and knowing that they'll outperform most other peers and benchmarks that they go off of by just having some of that exposure to the space.
Right.
Yeah, absolutely.
And just to finish off the tail end of your question there, Nico, which is we do see possible headwinds, right, that we talked about in the general markets. But one of the things that we can do is we can hedge around that and isolate out that risk. We can't hedge out Bitcoin's correlation to the overall market, but we can hedge out the overall market and help mitigate downside risk in moments of volatility, like David's saying, where you have a drawdown. That creates opportunity. So if you have some hedges on and you're able to move around that, then you end up having the opportunity to weather that, number one, but then have capital ready because you've now created liquidity in a drawdown to take advantage of that drawdown and put it into Bitcoin-related investments that may have a better upside volatility and more beta to the upside than when you put on those hedges. And that's something that we can do. We can capture that volatility and turn around and put it back into the portfolio. So it's an important distinction.
Absolutely. And final question, guys, because I want to be respectful of your time. So you guys are both very successful individuals. You guys have very impressive resumes and backgrounds, and you guys technically could just, I'm just going to have my Bitcoin, I'm going to live my life. What motivated you to start this, James? And then same question to you, David.
Well, I mean, I wanted to be in the space and I wanted to continue doing what I was doing, which is investing. And I didn't want to go back to the regular hedge fund world. But when I saw the opportunity here and just the gaping hole for what we're offering, like there's nothing that I know of that's doing exactly what we're doing. I thought that it would be something that people would want to join in and do alongside with me. I love the people I've met in this space, and a lot of them are limited partners now with me, and we're having a blast doing it. I say that, but I truly, Nico, I wouldn't have done this if I hadn't met and trusted David so quickly. I met David through Larry Lepard. And, we're the two managers of the fund. We're the co-managing partners, and that we do all of it day to day. And we play off well with each other, because I come from an arbitrage, kind of a very interest rate sensitive world with bonds and arbitrage converts and that stuff. And David comes from a deep analytical, structured finance, corporate finance world. And so the two of us, you put us together, and I think it works pretty well.
Yeah, I think the only thing I'd add into that, it's a lot of fun working with James and our advisors. We got a great team. And I think secondly, just the asymmetry of this opportunity, right? Just understanding that the world, I've always been a contrarian by nature. And kind of when you see kind of a contrarian investment of an asset class that's misunderstood. So you think about Michael Milken, for instance, in the 70s, like any guy like Howard Marks at Oaktree, who's a billionaire, right? You could argue that he saw the misunderstood and underallocated space of the junk bond market in the 70s. And guys like Milken that saw it and then grew this market, and it took off over time. I think Bitcoin is the modern day version of that. It's misunderstood. It's underallocated, as we've talked about with like endowments examples. And when you can find a team like we have that can have a hell of a lot of fun, that thinks similarly, that can bring, name of our management company is Graybeard Bitcoin Management, because we have our gray hair and we've got our experience. And if we could come to here and change the world in some fashion and really deliver returns for our LPs, like one of the best things that makes us happy is when we get calls or emails from LPs in our fund saying, thanks guys for generating these type of returns. Like that's what feels good, right? When you're helping out families grow their wealth, and you could say, wow, you could just buy Bitcoin. Well, they're diversifying. They're doing both, having some of their assets in us, having some in mutual funds, having some in Bitcoin, having some in the real estate. We are a tool for them to help grow it. And then we're helping, lastly, it's a hell of a lot of fun working with companies, especially on the private side, where you can advise entrepreneurs, give your 2 cents from our cheap seats of what we have seen in our careers, give them some advice that might be worth something to them, to cheer them on as they grow great companies and are changing the world. That has a lot of gratification too. So we're really excited about this.
Absolutely. So where can people find out more about Bitcoin Opportunity Fund and stay up to date with you guys? James?
Yeah, you just said it. For anybody who's an accredited investor and is interested, you can just go to bitcoinopportunity.fund, www, and it's a short questionnaire. Just fill it out, and we can send you information, jump on a call. We've done some webinars, and you can find a lot of information there. So
appreciate it. What about you, David? Where can people find you?
Yeah, nothing to add. James got it, bitcoinopportunity.fund, and obviously James is active on Twitter. I'm DAAF17. I'm the quiet one. As I said, I live in a cave. I come up for air every once in a while and post something. But
David's the brains of the fund.
No, just trying to keep my head down.
Well, James, David, it's always an honor. Thank you guys so much for joining me. Really appreciate it.